Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. As always, guys, they're all in and they're all in a specific thing. What are we talking about? We're going to tell you exactly what it is, and it's a little dangerous, so you got to listen in. Let's dive in.
Trade Genius.
Hey everybody, it's Bob with Trade Genius. Hey, it is holiday season and our holiday specials are running right now. Use promo code HOLIDAY. You already blew it. You missed the Black Friday specials, but this is your second chance to take advantage of some of the best pricing that we do for the year. Check us out, tradelikeagenius.com, tradegenius.co, tradegeniusacademy.com. All roads lead to Trade Genius. Check us out. Incredible deals. Thanks for listening.
Okay, Bob. So, this market's hilarious. It's just over and over and over again. But I think because we're running out of things to get into and prop up the show, I think we're seeing the final act. What do you think?
I don't know. When we show you these two charts, if you're a risk manager for a large institutional or pension fund, what would you be telling your traders to do? And let me show you this first one. This is U.S. equity futures positioning of non-dealers. These are the speculators, Phil. They are all in. Never in the history of the positioning had they been this leveraged to the long side.
Right.
And just so you guys know, in trading, these are the moves you fade. Okay. You don't run with this. You run in the opposite direction.
Yeah.
And they're just going to get absolutely obliterated, Phil.
Yep.
And the second chart I want to show you is when we talked about this a lot. This is why I always laugh when people troll us in the room saying it's a new bull market. Well, most people aren't in 7 stocks. So it's not a new bull market for 99% of the investing public.
Right.
It's just that there's a certain group of traders called these spec hounds that have leveraged basically the top 7 to 10 stocks, Phil. Mm-hmm. And they're using a trick. And this is one thing that really pisses me off about how we structure our investing community. They're all games for them to game the system and take more money. They're not really out there discovering value. Right. They're out there to figure out how do we game the market. And what they've done is they've created an index that's market cap weighted, meaning that if I own this company and Phil owned a company, we're public companies, and I'm a $200 million company and Phil's a $100 million company, that I get ever increasing share of the growth of the asset. So this is why companies like Tesla could have the hundreds of billions of dollars of market cap on a company that's probably not even worth $5 billion on a cash basis. Apple almost $3 trillion, because as money's flowing into these indexes, they get pushed up like a super high tide in a hurricane. But one thing we know about high tides is they go out, Phil. What say you?
Yeah, and look, I think I have to go with the structural flows, and that's going to tell us that we're probably going to be fighting to move up into the end of the month. And really, we have a window here, more so after this week when we get into OPEX tomorrow. That the next week is the bearish shot to see where they can take this market down, and that will also depend on where VIX goes, because if VIX can expand high enough, then we're going to see a lot more downside. But if they don't, then much like what we've seen in previous OPEXs, is that it's a short-lived window, and then we're moving back up. Where I think the rubber is going to meet the road, and I've said this before, and I'll say it again, is where I think we got to watch jobs data and watch the relationship with the bond market. Yields down, stocks down is the death knell, I think, for this market. And that means things like TLT will be going up and equities down. Classic recession trade, but I think really the missing piece to that puzzle is going to be the jobs numbers. Now, it's interesting because TLT has seen a lot of, I think, bearish positioning. We saw a lot of big orders coming in, institutional size orders. So we could get a pullback on TLT. And that means that the stocks would follow suit, because we're trading in tandem right now. But until we get into the recession mode trade, then TLT up, equities down. But right now they're trading in tandem. So we got to be careful here, because if you couple what's going on with the positioning, right? And so you got record net positioning long. You've got the market cap weighted so concentrated here. That means that all of the big boys, the Mag 7, they're all in on that. So that's what these two charts are telling you, that it's now we've cornered everyone into this small section of the stock market, and they're all in. It's the last hurrah. Now, there could be a significant drop here just from because usually when the positioning is this extreme, unless there's QE flowing and the floodgates are open, which is not the case, you're probably going to get some kind of rug pull. Now, where I think this probably goes is we could go down into the end of the month. We have a small window where they could bring it up to the middle of the month. And then I think we got to watch seasonality because this market has been pegging seasonality for like the last, I don't know, 6-7 months. Perfectly almost. And that means that we're probably going down into March. Now, if the wheels haven't fallen off by March and we get some kind of stick save, and remember, there's usually some sort of credit event institutionally in March. If not March, then it's in Q4. So we're running into that window too, where somebody's might have trouble. And remember, these banks are still not out of the woods. We have that bank funding, bank term funding program, right? BTFP. Now, people are saying that, oh, the Fed's not going to renew it. That's bad. It's actually not bad because in that program, there is an option to extend for 12 months. So while they can end the program, that extension can still run for another 12 months. So in reality, it's not ending, right? If the banks need another 12 months, they got it. They're just not going to accept any more applications after that. So I don't think that's really earth shattering. If you guys have been worrying about that, I wouldn't worry too much about that. But I do think that you probably may see some institutional problems come to the surface. You may see some bank headlines in March, and that probably exacerbates the price action. And potentially we could, maybe even trade down to 4,600 on the SPX. That being said, or lower. But that being said, I think you have to be careful for a squeeze from March into summer. And I think that's where I'm most interested because I think that's the last hurrah. We're talking about last hurrahs here now. I'm going to be keying in very closely on the jobs data at that point, that stretch there from March to June. Any cracks in that, and I think you're going to have to buckle up because this is all going to culminate into the recession trade. And this is where we want you guys to be very protective. Like this is, right now it's like, we're dancing around and we're probably going to make new all-time highs. And you may see a big move going into summer, but I think it's a huge, gigantic trap. And the only thing that would tell me otherwise would be that the dollar stays very weak and jobs data remains high, then I would back off from that stance. But Bob, I just don't think that's in the cards given all the other data points that we're seeing right now.
Yeah, I agree with you, Phil. I think we're going to have to watch the bond auction and see how the market reacts to it. It's so funny from, November to January 1st, the market liked what it was doing with its relationship with the bonds. And then the bonds yields started to fall and the market liked that. Now the bond yields are going up again and the market likes that. So to me, what that tells me is that they're just throwing leverage upon leverage upon leverage until the liquidity goes away. So that's what I'm looking at is that any day you wake up in the morning, if the market's up, there's a narrative behind it. But I agree with you. The oil relationship now to the bond market's starting to fracture. And now I'm waiting for the stock market's relationship to the bond market to fracture. Then I know it's over. Like I told you guys, China's already in the event horizon. And, when we join them, then there's going to be no mercy. I traded 2000 to 2002. Okay. And it was week after week after week after week of weakness. And it was just raw. People were just getting raw from it. Now, the good news was oil and gold were doing fine. So there was a place to go. This time around, I'm a little worried that it's just going to be we're going to go from all in everything to all out everything, Phil. And I think it's going to be, people aren't going to find too many places to hide. We have 4 of them, we'll share them with you if you become a subscriber. And those are the ones we're watching on our watch list. And, but it's going to be very, very few places to run and hide. And if your money's professionally managed, probably the only choice you're going to have is to go to cash, to protect yourself because they're not going to break these things apart, just for you. But if you trade, then there's some really nice things that you can do and to protect yourself. And I'm already there. I've just put my one last piece to go and I'll be ready for the 2024, 2025 tumult. But I'm pretty much now protected. These big vol moves we're getting here the last 2 weeks, hardly moving my account, and my sold calls are providing income for my family. So I'll be quite happy with that if that's the way it's going to be. I just fear a big downdraft because nothing's going to protect you unless you're already hedged.
Yep, guys. Let us know if you think we're going down into the end of the month or we're going to jam higher into the end of the month, because I'd like to see the consensus from you guys on that. Otherwise, please hit like and subscribe. Check out our specials over at tradegenius.co, and we will see you guys on tomorrow's video. Take care.
Trade Genius.